All right, GMGM and GNGN, depending on where your time zone is. Welcome to another live stream from Mantle. I am excited today to dive into Mantle Index 4 or MI4, a new institutional grade fund designed to bring crypto native yield into a regulated, accessible structure, right? And we've announced that Mantle Treasury has set an anchor commitment of up to 400 million. And the excitement and the expectation is that, for some are calling it the S&P 500 crypto to be the backbone of the industry, or rather a Mag 7, in the sense that it's the top majors, all wrapped into one product that offers diversified exposure to Bitcoin, Ethereum, Solana, and stables, with mETH as a core yield generating component. So in this live stream, we're joined by contributors involved in both of these products. From the MI4 side, we have Sohan, and from the mETH side, we have Zoe. So let's get started. My name is Tim.
Yes.
I'm Global Head of Strategy at Mantle. Here we have Sohan. Do you want to give a quick introduction?
Hey guys. I'm part of the Mantle Index Four fund. So Mantle Index Four is the name of the fund, and Mantle Guard is the fund manager, which I'm part of. And what we offer is, as Tim mentioned, very simply, a crypto beta product to rival, the likes of FANG, Mag 7, almost trying to be the S&P. BTC, ETH, Sol, and stables is what we have in the fund. Very simple, you don't have to worry about token selection, anything like that. The key thing for us is that we are going to be offering yield, right? Many people in traditional finance come into crypto. They're happy to just get that beta to ETH, etc., without taking into account the fact that you can get staking yield. And the way I like think about it is that it's you're almost like giving up. If you buy Apple, you don't give up the dividend yield, right? It's kind of like that's what you're doing, and people seem comfortable with it. And our goal here is to really come in and just say, look, you should be getting that yield. That's the product. I'll hand over to Zoe.
All right. Thanks, Sohan. Thanks, Tim. Hi, everyone. I'm Zoe. Currently, today, I'm representing mETH protocol as part of the major components of MI4, the index fund. Super excited to be here because we've seen, the growth and the birth of MI4 in the past few months. And now, here we are at our arrival and also at a very interesting point of convergence between TradFi and DeFi. mETH is a vertically integrated staking and restaking protocol on Ethereum. We have launched for almost a year now. This year has been very exciting for us, not only because we're expanding to various different ecosystems, some of the most promising one, like Hype EVM. We are also working very hard expanding our presence and distribution channel among institutional investors. And we believe that is actually the growth segment and sector for us in the upcoming years. And super excited to be here and happy to dive in.
Amazing. So over the next, hopefully 30 or so minutes, we'll deep dive into both and to give our community a better understanding of how our products in our ecosystem, such as mETH, is tying into MI4, which is part of our ecosystem. So if we think about, let's move back to the MI4 product, right? And I want to set a bit more context here. What's really interesting is, as Sohan mentioned, people are just leaving yield on the table. What does that exactly mean? Well, in the TradFi world today, most people can buy spot ETFs on BTC, spot ETFs on ETH, but there's no staking component, right? And so we're seeing people rushing to get the regulatory clearance so they can push a staking product, at least in the US. It's viable in Europe. So you think about there's single assets. What we're seeing here with MI4 is putting them into one basket and then giving the yield back. And I think that is an innovation that is very welcome by TradFi. I've spoken to a lot of different RIAs, wealth managers, funds, and they're excited about that next iteration innovation. So let's deep dive a bit more into MI4. So Sohan, what is kind of the problem that you see the MI4 is solving in the world of crypto today? Let's say maybe tackling the Web3 side of users, and then what do you see it tackling the TradFi side of users?
Yeah, so on the Web3 side, right? Like many people have a very strong view on, I want to be long this coin, I want to be, leveraged on this particular, coin, and I want to be farming this particular token, right? This is something which all crypto natives, like Web3 users have, right? They have a view on something, right? Um, However, what we don't realize is that, just because you have a view on something and you have 100K of assets doesn't mean that you bet the entire 100K on that view, right? On that very leveraged view, right? What everyone's portfolio is actually like when Bitcoin goes up, everyone makes money. If ETH goes up, people make money, right? So this is supposed to be like the core like beta component of your portfolio. So a portfolio is you get beta because you just want passive following of crypto, and then you have your alpha, which is what you have a strong view on and you follow through. So this is basically going to be that passive side of the business, and that's what we offer to Web3, right? Now for the TradFi, it's exactly the same reason, right? Except we also take away all the need for wallets, custody, and all of that, because we have this in a traditional fund wrapper, right? So you go and find like a fund, you buy it on Interactive Brokers or something like that. This is exactly the same. Instead of buying some basket from some provider of U.S. equities, you're buying a basket of major cryptos, right? So to TradFi, it's even clearer than for Web3, and of course for both of them, we are offering staking yield, right? That's that I think that's the like the main arguments. Now, just like every other index, you have to bear in mind that we also rebalance. We take into account the fact that there are shifts in the market capitalization of major coins. That's a normal part of like the process, and we kind of take that away to make sure that if ETH quadruples, suddenly your portfolio is not 100% ETH, right? Like we want to reduce that and buy it so you have a diversified beta to a bunch of tokens.
Yeah, and
Yeah.
what's exciting here is, look, people often say history doesn't repeat, but it rhymes, right? So if we look at the U.S. equity capital markets, and we see that ETFs are the dominant form, especially passive rules-based ETFs. How did we get there in the last 20, 30 years? Well, we had too many individual stocks, and people prefer passive strategies where they just set it and forget it, pay the fund, a couple bips, and let that move into thematic strategies. And so that's what we're seeing now on chain. We're seeing there's too many tokens, too many themes. People don't have the time to manage across all of it. And so it's a good time to roll up those products into a basket where people can similarly set it and forget it. So we're seeing this ETF trend play out online. We want to be the first via announcing, again, the mETH product into the sphere. We think some pretty innovative work there. I want to jump into next thing, which is Sohan, tell us what's inside the mETH basket, and then I want to cover why mETH was selected as part of that. And so we'd love your comments there.
Yeah, sure. So the basket currently is 50% BTC, 26% ETH, 9% SOL, and 15% dollar stables. Now, of those, the BTC is not staked, right? We only do native staking. And then ETH is staked as mETH, SOL as BB SOL. And then for the stables, we're using Ethena, so SUSDE. Right now, the important thing to note is that on average, this basket, right, even with the BTC not staked, gives you about 3% currently, right? And yields, as you know, are quite low overall. But just 2 months ago, this was at close to 5%, right? It was something like high fours. So that is, and of course, it's staking yield, right? So you are exposed to floating. It's a floating rate. It's not fixed rate, right? To me, the big thing is it doesn't matter if it's 1% or 5%, whatever you're not staking is being left on the table, because if you're long that coin, you're probably not that concerned about the staking risk, right? Given its native.
And can you deep dive a bit more on how those specific allocations were determined across BTC, ETH, Sol, SUSD?
Yeah, so we basically the SUSDE, the dollar stables, we chose that, right? Because I think there's one thing to say that crypto is a beta play, right? There's another thing to say there are certain opportunities in crypto which are available for yield, right? So just as somebody would say, I want, if crypto doubles, I want, I want to get exposure to that. But you also, like, if crypto yields are extremely high, I also want to get paid in a yield format. That's why we said a small percentage of dollars is good. Like Athena right now offers the most risk reward adjusted, best return on a risk reward adjusted basis. Then Bitcoin, ETH, and Sol are weighted by market cap, but capped at 50%, right? Why do we do that? So that because if you can look at the history of this basket, you actually notice that just because Bitcoin is having a very large rally right now, and I think most people would agree, 50% Bitcoin is not like a crazy outlandish number, right? But if you go extremely high, like let's say close to 80%, right, that is you're basically ending up very similar to just trading Bitcoin, and you never know what the next thematic story that comes to the market is. Like, Sol in the last 2 years is 10x or more than that, right? So yeah, you just want exposure, on that basis. But the rule is it's market cap based and capped at 50% and floored at 3%, but nothing is near the floor right now.
Yeah, I want to make a quick distinction. What we've seen in the market is that a lot of other products are out there that are more of a basket, but they're top 10 market weighted. That oftentimes skews towards 85% Bitcoin ETH, and everything else after that is pretty correlated. And so you're really just getting market directional exposure, which is fine, but then you're not getting a well-balanced portfolio, right? And some people say, oh, well, I can just long Bitcoin or ETH. Why do I need something like an MI4? Well, people can both long NVIDIA and hold S&P 500, right? And people would then argue, okay, well, the yield on Biddle or Treasury T-bills are 4%. Why would I mess in this product? Well, sometimes S&P returns, sub 4% below Treasuries on a given year. But if you look at a long time horizon, you have a long duration and preference, that's where the end goal is, right? We're targeting long-term time preference, larger holders. So I want to double
Yeah,
click
I
a
mean,
bit.
actually, I get just one more point on that, right? On the asset selection. The one thing we didn't mention is, we didn't go into too much detail on, is that, Mantle Treasury is putting up to 400 million into this fund, and this is what we think is that we are most comfortable with, right? Like, if we go the top 10, there are many coins in there where we have no clear visibility on where that's going to end up. So Mantle Treasury has basically said this is what we're comfortable with, right? And I feel that gives us a lot more credibility because somebody who is so large is coming in and saying this is my asset mix, right?
Yeah.
Yeah.
On that note, asset mix. How important is asset selection with respect to why did mETH stand out versus other Ethereum type products? What's so special? Zoe, help us understand that a bit more.
Yeah, for sure. So I would say there are a few things that mETH actually are different from other Ethereum staking protocol. First is that it's vertically integrated, meaning it has combined native staking as well as native restaking. It simplified the use case as well as the user flow and also increase the capital efficiency. You don't have to hold two, receive tokens and to receive basically the similar yield sources. That's one. I think the second is that I think mETH came relatively later in the market. It gave an advantage in terms of how do we gauge about the landscape as well as how do we want to go about. For example, we have actually focused a lot on positioning mETH and CMETH both as a go-to collateral asset on major trading venues. We have experimented first with Bybit, and we have actually received relatively positive feedback from a lot of trading firms, especially those are running delta neutral strategies, especially when they're trying to hold Ethereum exposure. Obviously, Ethereum this year has, been a very challenging year, both as an asset, as a network, and we're not denying that. But the truth is that, if you hold, for example, if you're a fund holding 80% in Bitcoin as their delta neutral strategy, you still would like to hold, say, 8 to 10%, because if this asset give you a very steady yield and very clean yield behind it. And what mETH stand out also is that because of the current native restaking protocol, how nascent they are, and how unstable the real yield from AVSs, we have actually selected a strategy that hedging all those out tokens like Eigenlayer or symbiotic points and directly exchange that or hedge on our behalf to native Ethereum. Trading firms especially like that is because if they hold 5% native Ethereum yield on a weekly basis, they can do actually a lot more on their option trading or their delta neutral strategies and give them much better return. So it's really about a yield game, and it's about how stable and steady your performance is. And we are taking this example and a use case to other trading venues, which the names I cannot really share now, but I think people will know that in very, very soon period of time. We're also building out a relatively robust infrastructure in terms of custodians, prime brokerage, as well as all the upcoming ETF issuance on staking product. So we believe it's actually a very exciting year. And the last thing I want to address is that probably potentially on Ethereum as an asset. So I'll be very honest. I think Ethereum is facing a very difficult challenge at the current moment, but it doesn't really necessarily mean that everything that's built on is, it should be completely taken over. Because if you really look at the DeFi landscape, the robustness and the aliveness of the DeFi landscape actually requires historical timing as well as floods of capital and DeFi protocols and altcoins to attract capital in, and also exchanging those capital into stable coins. And that's exactly what Ethereum currently is. It has very, very many blue chip protocols on borrow and lending and stable swaps and DEXs that no other ecosystem can simply replicate. HiPVM launched on Arbitrum. That's also not an exception. Solana absorbed a lot of retails, but at the same time, most of their liquidity absorbed in meme coins. So it's relatively hard to replicate that in DeFi. Staking is the most fundamental and beta yield on that such DeFi ecosystem. And if TradFi and DeFi converge, it will be happening on Ethereum, and staking will be in the one key component of that. So I think that's kind of how I view it.
Yeah, you touched upon something interesting, which is the lens of how do traders see this product, right? And structurally, because mETH and CMETH is structured so that CMETH automatically figures out in a passive way where to allocate across all of the different restaking protocols. That actually is a brilliant product decision, because if you don't do that and you leave it up to the user, you're creating a B2C product, right? The user has to go pick, okay, how do I do this? But all of a sudden, if you package it thusly and say, hey, this is the product automatically, then you've created a financial primitive, right? Then trading firms can come and play around with that because they know that this is what they're getting, and that they know the rules, that's how it's going, and they factor that into their models. So very, very interesting. Coming back to Sohan, we're seeing that the broader Mantle products, ecosystems, affiliates, is placing a greater emphasis on institutional participation in 2025. So how does that relate to ecosystem developments like the MI4 fund announcement?
Yeah, actually, I think institutional capital into crypto has been quite difficult to achieve, right? For us, and for us, I mean the crypto natives in general, right? If you look at all the various ways of tokenizing real world assets and putting that on chain, etc. Right now, all of these are basically giving the real world access to crypto natives, right? It's not really like, which is basically, there's not that much money in crypto, right? Like crypto people aren't that rich, right? What we need is to get the TradFi to really access crypto, and I think crypto beta is like one of the easiest plays, and products like our like MI4 is a very good access product for TradFi to come in, right? Because like it's a very small difference versus what they are existingly allocating. Like let's say you're a small family office, right? You come in and you say, look, I'm 98% in like equities or bonds, and I just want to allocate 2% to crypto. Suddenly you can go and buy that crypto in a very efficient, fun format, and then get that access. And that's new money in crypto, right? That's new money that's flowing to like protocols like mETH, right? Which right now it's just people moving money between crypto natives, which is not really what we want. I would say the ETF was the one other tool which has worked well for this. But as we said, like we have some structural advantages over the ETF, right? Because we are offering yield and diversification. I'm not sure I answered your question.
No, definitely. I think the general premise is like how is Mantle facilitating TradFi capital coming into the crypto space, right? And I think MI4 does a good job of skating to where the puck is. So if you just look at stats on DeFi Llama, there's about 100 billion TVL locked up on chain. There's about 100 billion in AUM across all the Bitcoin ETFs alone. With DeFi on chain, that's peaked at 150 billion late 21. It's probably a decent chunk of capital on chain. Whereas in TradFi, 100 billion is the tip of the sphere, right? Guys like on Fidelity said, don't bat an eye unless you're like at the tens of billions. So what's interesting also is that if you spend time in the RIA and wealth management space, at least in the US again, because it's a large capital market, a lot of these products have not yet entered the brokerage's sales channels, meaning the RIAs, the advisors, are only now telling their clients, hey, you should put 2% into Bitcoin. So that wave of capital has not yet fully hit its stride. So there's still more capital waiting on the sidelines. That's something to be excited about for us as the industry overall. And I think, once that capital comes in, back to the earlier analogy of you can hold Tesla, you can hold Microsoft, why not just hold a basket of the Mag 7 and the dividends that come with it, right? And I think that's what the insight and the vision of MI4 is doing, skating to where that puck is going. So coming back to Zoe's side of things, with the mETH integration into MI4, how does the mETH protocol align with what Sohan described with respect to the institutional side, right? What are some longer term institutional initiatives that mETH is taking on?
Yeah, we're very actually excited to be wrapped into this product and as one of the major assets in it. On our own, as I said, we actually have been touching upon a very few verticals that we are very bullish on. The one is, preparing that infrastructure readiness, including all the regulated custodians readiness, as well as prime brokerages, making the liquidity, is there on different trading venues, and also making the collateral option ready. And when the demand has come, we want to be the first or one of the first assets to be chosen among all of these issuers and offerings. And second thing is the way I saw about institution, there are also different spectrums, right? Trading and hedge funds are the most sophisticated ones. They always counting on the yields. They drop your assets when the yield is down for 1 week. But I think MI4 is targeting the institution that's relatively more sticky, and the one that they don't usually come in very easily. But once they come in, they don't go out. Like this spring festival, I went back to China and talking to a bunch of family friends, who are in real estate. And they're all interested in crypto because of the whole US-China relationship. And they want exposure to that, but they're like, okay, all of my money are in my Hong Kong bank holding ETF. If you give me 5% yield, I'm ready to allocate some of it. And I think we're talking exactly those kind of customers, those that know a little bit about crypto, but they don't know enough. And they need a trusted products and venues that they have access to. So I think exactly that's what MI4 is targeting, and where mETH can position itself as one of the assets in it. Yeah.
And there's a key piece that you hinted on, and Sohan, would love you to share more about, which is Zoe, in this example, your friends and family in Hong Kong who want to invest in this and their capital sitting in HSBC or anybody sitting in a TradFi bank, why is MI4 well positioned to capture that? Because it's in a TradFi familiar wrapper. Sohan, do you want to share a bit more on that?
Yeah, so it's exactly that, right? Like no TradFi player really wants to deal with wallets, custody, all of that stuff, right? When you're new to crypto, right? Like when you're new, when you've spent 3 years, looking at yield farming, etc. Of course, you're very familiar with wallets, and we all are, right? If I ask my parents, like, open MetaMask, right, it's not going to happen, right? Like they have a view, they want like correlation or payoff from these assets, but they don't want to deal with wallets or custody or any of that. They don't want to have risk of getting hacked or any of that stuff, right? So we abstract all of that away. Very simple. You are buying a BVI fund, right, which is like a standard fund format. You give me like dollars, dollar C, and then I will give you the performance of these assets, with the yield, and when you redeem, I'll give you back dollars, right? So you don't, in a way, ever even have to touch touch crypto, like as in BTC, ETH, Sol, etc. To me, that is the easiest access product that you can get, right? Like it's, if I could find this in my HSBC private bank, in the investment like section, I would definitely buy it, right? In terms of just to make sure that I'm somewhat exposed to this hot sector.
Great, great. Want to change the topic a little bit into the other side of things, which often crops up when people think about crypto, which is security. So let's talk security. So Sohan, from your side, what protections or compliance frameworks are in place for MI4? And this is a good segue, given that we're talking about how it's structured as a TradFi wrapper.
Yes, so we have, as part of setting up a BVI fund, we have all the standard AML, KYC, all the requirements which are needed for just opening a BVI fund. We've partnered with Securitize, to be the fund admin, and they are a registered entity in the US, and they have to go through a bunch of checks in order to make sure that money into this fund is legitimate. And most importantly, they're also in another form. They're also tokenizing our fund, right? But this tokenized fund is only transferable between approved investors. So everyone who's involved in this fund is 100%. We know who it is and who's they've been KYC basically, right? So this gives a lot of people a significant amount of comfort, right? Because you know that you are not secretly funding like terrorist operations or any of those scary things that people think about crypto, because we know exactly who is buying these products. Now, in terms of security, we are using Fireblocks, right? Which is a market leading like wallet solution, and we have multiple signatories for everything, all the transactions that we do. And in the future, depending on investor demand, if people want to add even more security, we are in discussions with some custodians as well, just to add another extra layer. I mean, this is already extremely safe, but to add an extra layer. Yeah, those are the main points. Yeah.
Great. And Zoe, what about for mETH?
Yeah, I think that's such a great point to be touched upon, because mETH essentially is a on-chain protocol run by a smart contract. So essentially, it's supposed to be permissionless. And in crypto, especially on-chain economy, hacking, has been a constant theme coming back. And I think, for mETH, we always prioritize security as the number one feature for us, or because essentially you're touching people's real money and also our own treasury's money. We have definitely audited the protocol by top-tier security firms multiple rounds. Earlier this year, with the hacking incident on Bybit, mETH actually is one of the only protocols that actually have traced back the assets from the hackers because of our protocol design and security choices. So we were able to do that on a relatively more permission ways, but protecting users' funds. Obviously, there are a lot of broader industry challenges that we need to work with everyone. For example, the front end hack, like on Gnosis, how do you even prevent that, right? So we have adopted a multi-custodian solutions, including working with different custodian providers like Fortify, etc., on our own treasury side. But this is definitely a long-term challenge that we don't want to shun away. And we believe that if we position ourselves as the top tier, the leading protocol on this, you really can bridge the trust between on-chain protocol and the TradFi investors.
Makes sense. Makes sense. Well, great. So last question for each of you. Fast forward 2 quarters, 4 quarters from now, how will each of you evaluate the success of MI4 itself and the mETH asset adoption? Is it purely TVL or the deeper metrics you're watching for?
Yeah, on my side, I would say the main metric would be TVL, and like how many places reference MI4 as as like a source of like the fact that markets rally, they're like, oh, MI4 has doubled, right? To me, that would be the measure of success, because the S&P is not based on TVL, right? The S&P success as an index is not based on just TVL. It's TVL and the fact that everyone says, oh, S&P went up today. So I would love it if people didn't say Bitcoin went up 30% last year, but they say, oh, MI4 went up 30%. I think, to me, that would be a good measure of success, and of course hopefully billions of dollars in the fund.
And Zoe, what about mETH?
Yeah, I think for mETH, there are multiple metrics that we want to look at. The first one definitely is a TVL, because you can only have that much scale without, if you don't have this scale, you really cannot do much with it in terms of liquidity and everything. And there's also the on-chain and off-chain parts. For on-chain, we want mETH and CMETH to be the leading asset in the top tier ecosystems. The reason we are backing HyperVM is because we believe it represents a new paradigm in terms of open finance. And so bridging our assets into those ecosystems kind of like to represent our view about how the on-chain economy will evolve. Obviously, on the off-chain side, actually, my vision is that I want people to forget about mETH. But for example, if they're holding Ethereum staking asset and if they're holding Ethereum staking ETF, I want mETH to be the top leading asset within it, but they don't really care about it. Because we are become so seamless integrated with the auto infrastructure and distribution channel. So those are the visions and the matrix that we want to value.
Yeah, I think the common thread here is both individually in their own right are aiming to become financial primitives of this ecosystem in crypto, but also enabling TradFi to come into the on-chain world. Fantastic. So let's wrap things up. Anything else to share from your side, Sohan? Anything else to share from your side, Zoe?
I don't know, nothing from my side.
Yeah, I think we're at a very interesting point, and I think this conversation probably will take change even after a few months, because the market is changing so fast. I'm very excited for that.
Yeah, absolutely. I think this is the cycle for greater institutional adoption. All the conferences I've been to, even though retail feels, in the dumps, institutions are excited and ready to ramp up. So yeah, let's check back in and see how both of you are doing in the future. Thank you so much for taking the time, Sohan. Thanks so much, Zoe. And thanks so much, Mantle community. We'll catch you guys later.
Thank you.
Thanks for having me. Bye-bye.
Bye, guys.
Bye, guys.